Hi, my name's Henry Jennings and I'm coming to you live from this wonderful Sydney office that I share. And today I thought I'd talk about where the market is and where we're going. We've had a quite interesting ride, to say the least, under Donald Trump's first 100 days. And here we are on this fine day. We're at a 2-month high in the index. So it has been quite an interesting ride, to say the least. And volatility has been the thing. And we're going to see a lot more volatility. And we are still going to see these tariffs playing a big part in the market. The market has fallen from 8,600. It got down to 7,300 at one stage and has bounced back. We're nearly back at 8,100. And throughout all of this, some of the advice that we've been giving, or all the advice that we've been giving to our members and those people that follow us, has been don't panic. Taking a leaf out of Douglas Adams' book and The Hitchhiker's Guide to the Galaxy, don't panic, because fear and greed really drive this market and have been driving this market for a long time. And that fear would have been high anxiety when we were at 7,300 and people panicking. And what we've seen is the market has bounced back considerably. I'm not saying that we've got completely comfortable with what Donald Trump is trying to do in terms of the administration, but for the time being we are in a little bit of a lull, and that certainly is helping confidence return. And every day that goes by that we do get this lull and no more bad or really bad news, then the market does seem to want to improve. It is drifting higher on no bad news. That is not to say that we are out of the woods by any stretch of the imagination, because we have seen the mercurial nature of Mr. Trump, and things can change very quickly. We can backflip, we can do somersaults, we can do all sorts of gyrations, and things do change very quickly. And what we would say is that here at Marcus today, we are not afraid to go to 100% cash. And we did that at the beginning of all this turmoil back in late February, when it seemed to us that the markets had just got a little bit silly in terms of the upside, and the risks also were building. So we were very happy to go to cash. We have recently put money back into the market and we are pretty much 100% invested now, which has served us well. And we're not afraid, as I say, to go to cash and keep in cash for a day, a week, a month, or 2 months, or 6 months. We have done it before, and that is one of the unique things, I guess, about us. Certain funds will talk about having high cash levels, and they will say, you know, we've got elevated cash levels and we've got 10% in cash. That to us is not elevated. 100% is elevated cash levels, and that means that we are worried about the risk reward in the market, and so we're happy to stay out of it and try and time our entry and time our exit better so that we optimize the performance over the long term. Where is the market going? As I say, it is drifting higher at the moment. Gold has been the standout feature, but we're also seeing some of the bargains that have been thrown up through this turmoil doing very well. And some of the shorts in the last few days we've seen going extraordinarily well. Paladin, for instance, I think is up 50% in a week. That was one of the highest shorted stocks in the market, along with other uranium stocks. Now, what's changed in uranium? Not much, to be honest. The spot price hasn't changed that much, but sentiment clearly has. And some of the shorters that have made good money in our market have been buying back. For instance, today, Mineral Resources is up 14%. Again, another stock that's been heavily shorted. So we're seeing even the glimmer of good news has been responded to by these shorters and by professional traders by buying back quite aggressively and pushing stocks higher. So at the moment, we are faced with an election coming up this weekend. We've also got the RBA next week, which is going to be interesting, and we're hoping for a 25 basis point cut. And then we're going to get into bank reporting season, which is going to be very interesting. Banks have done very well and held up extraordinarily well. CBA hit a record high during all this turmoil, not a week or so ago. So it's going to be more interesting times ahead, more volatility. The banks have been defensive. Australia has been defensive, but at the moment the drift is certainly higher with the absence of any more kind of earth-shattering news out of Washington.